Now we're ready to talk about RSI Divergence, which in my opinion is the best strategy for beginners. And when it comes to divergence, we have many different types. And in this video, we will cover 4 different types. We actually have more than 4 types of divergence, but these 4 types are both the most common, but in my opinion also the most useful divergence types. We will look at the bullish and bearish divergence, and we will also take a look at something called hidden bullish divergence and hidden bearish divergence. And learning divergence can take quite some time and practice, so if you want to, I actually recommend taking a screenshot of the picture right here, so you can come back to it and study later. But now let's first talk about the basics here of divergence. And the very first thing we have to understand, and this can be super confusing in the beginning, so it's important to learn this right away. When we talk about bullish divergence, both the hidden and the normal bullish divergence, we are always looking at the lows, both the lows of the price and also the lows of the indicators. So you can see for the bullish divergence, we take a look at the lows here, always the lows. Doesn't matter if it's hidden or normal. And when we talk about bearish divergence, we always look at the highs. It doesn't matter if it's a normal bearish divergence or hidden bearish divergence, we always look at the highs. Many new traders will confuse the highs and the lows, and this can lead to false signals. But now let's take a look at the divergence types one by one. And let's start here with the bullish divergence. And first of all, the upper line here represents the price, and the lower line here represents the RSI indicator. You can see it says oscillator right here, but in our case, this is the RSI. And in order to spot a bullish divergence, what we're looking out for here is that we want the price to print lower lows, while at the same time, we want the RSI to print higher lows. And this is basically the meaning of divergence. Divergence simply means that something is going in opposite directions. So let's right away take a look at an example of a bullish RSI divergence. And as you guys can see, right here we have a chart. The price is on the top and the RSI is on the bottom. And the first thing we always need to do is that we need to identify the highs and lows of the price. And as you guys can see, we have one low right here. We have yet another low right here, and yet another lower low. We also have a high all the way up here. We have a lower high, and then we actually have a higher high. But remember, in order to spot a bullish divergence, we need to print lower lows on the price, but we need higher lows on the indicator. So if we take a look at the first 2 lows here, we can see that the low of the RSI is right around here, and we can now see that the RSI clearly prints a lower low. So here we have the price printing lower lows and the RSI printing lower lows. But now let's take a look at the next low. Here we can see that the price prints lower lows, but the RSI prints a higher low, right? So here we have lower lows on the price, higher lows on the RSI, or in other words, we have found a bullish RSI divergence. And what does a bullish RSI divergence tell us? Well, it indicates a reversal to the upside. So the bullish divergence is a bullish reversal signal. However, when we trade divergences, in order to improve our win rate even further, we usually want to combine the divergence with other technical variables. And that is something we will talk about later on in this course, so stay tuned for that. Alright, so now let's take a look at the opposite of the bullish divergence, and that is the bearish divergence. In order to spot a bearish divergence, what we're looking out for now is that we're looking out for, remember, when it comes to bearish divergence, we're always looking out for the highs. So here we want to see the price printing one high and then a higher high, while the RSI prints one high but then a lower high. And let's right away take a look at a practical example of the bearish RSI divergence. So once again, we begin here by finding the highs and lows. You can see we have a low all the way down here. The price went straight up and we printed a high. We printed a low, a high, low, and so on and so on. And here we can actually right away see that from this point to this point, the price prints a higher high. But if you switch the attention to the RSI, we can see that we are clearly seeing one high and then a lower high on the RSI. So the price goes in one direction, the RSI goes in the opposite direction. We have found a bearish divergence, and this indicates a reversal to the downside. And as you guys can see, after the divergence appeared, we saw a strong movement and a strong reversal down. Alright, so now we're ready to move on to the other divergence type. This is the hidden divergence. And let's start here by taking a look at the hidden bullish divergence. And many times the hidden divergences can be much harder to spot, at least in my opinion, compared to the normal divergences. So make sure to really pay attention now. What we're looking out for in the case of the hidden bullish divergence, remember we're talking about the bullish divergence, so we are looking out for the lows. But what we're looking out for here is that we're looking out for higher lows on the price, while the RSI prints lower lows. So this right here is actually a continuation signal. So a hidden bullish divergence indicates that the uptrend continues, right? But remember, the normal divergence indicates a reversal from a downtrend to an uptrend. So the hidden bullish divergence is a continuation signal, while the bullish divergence is a reversal signal. So now let's take a look at a real-life example of the hidden bullish RSI divergence. And now let's actually make this an exercise. So if you want to, I want you guys to try to find the hidden bullish divergence on your own. So pause the video right here and try to find it. Did you manage to find the divergence? Well, let's take a look together. So first of all, it's always useful to identify highs and lows. So we have a high right here, low, higher low, higher high, higher low, higher high, low, high, and so on and so on. And remember, for the hidden bullish divergence, what we're looking out for is we're looking out for higher lows on the price. But let's compare the price with the RSI. So on the first low to the second low, we can actually see that the price prints higher lows and the indicator also prints higher lows. But if you take a look at the next low to the next higher low, we can actually see that in this case, the price prints a lower low. So here, the price prints higher lows, while the indicator prints a lower low. So this right here is our hidden bullish divergence. And remember what it indicates. It indicates a continuation to the upside. Last but not least, we of course have to take a look at the hidden bearish divergence. This is once again a divergence that can be pretty hard to spot. And since we're talking about a bearish divergence, we are always looking out for the highs. And in the case of a hidden bearish divergence, what we want to see is that we want to see lower highs on the price, while at the same time we want to see higher highs on the RSI. So let's of course also take a look at an example of the hidden bearish divergence. As you guys can see on this chart, here we have a very beautiful and clear downtrend. We have a high, we have a low, we have a high, low, high, low. But where is the hidden bearish divergence? Well, if we for example take a look at from this high to this high and compare it with the RSI, we can see we have a high right here and we have a high right here. We can actually see that from that high to that high, the RSI also prints a lower high. So when we have lower highs on the RSI and lower highs on the price, we actually say that we have a convergence, meaning that they go in the same direction. But if we take a look at from this high to this high and compare it with the RSI, we can clearly see that the RSI is printing a higher high. So here we have lower highs on the price, higher highs on the RSI, which makes this point right here our divergence. And the bearish divergence indicates a continuation to the downside. This video was just a short clip from our full RSI trading course. So if you have the time, I highly recommend you to click or tap on the screen right here to watch the full video. I hope to see you guys soon, but for now, take care. Ciao, ciao.